Hi, everybody. Brock, how are you this morning? Everyone doing okay? Turnaround Tuesday. Looks like we got a high in S&Ps. This was actually Sunday night and Monday in here. Took out this a pretty sharp degree channel line here. We'll have a two close reversal on the daily. Yeah. Good morning. Oh, you saying love me tender, go Tom? Did it work? I hope you didn't get stopped out. Hell, you got stopped out. All right. So with risk off, I'm a little surprised I'm not getting more downside in the end. It's still holding here. Let's see, it's a long day, probably because of dollar strength, right? Looks like, something that Steve talked about, par, is looking pretty likely here. See what happens up here in par. I will start to scale into dollar shorts above par. That's my plan. Okay, and EG's bounce that we had yesterday is being negated. We're finally going to challenge this low. We're right now not confirming this recent low, which is the case building. 1 hour isn't either. I still think that we need to take out this low here, which is 77. I'm sure there's a couple of sell stops here. And look at the RSI reading down here. So I don't think we're going to achieve the same reading. This is a 23, I believe, 26. So even if we take this out, we're currently above 30. Be nice if it stayed above 30. And if risk off is really the deal, the real deal this time, that was it for crude. And we should get new lows in crude along with pressure with risk off, trading back under 51 sets that up. Thinking just like it was a few weeks ago before this bounce. And, I thought if we closed over 52, we barely did it last week, that maybe we're on our way to 55. But now that we have some risk off, 48 looks viable to me. It'd be a new low by about $1.50. Also, something that more people, even saw Shy Girl tweeting about it, and Steve talked about it, is USD Won. It's threatening a breakout here of this bull flag. And then, next move could take it up to 706. This again is part of the risk off scenario with the Won weakening. I think one of your better candidates for shorts are the banks. Banks are barely making a new high compared to what the S&Ps did. And actually best of breed, JP Morgan, Jamie Dimon, with all this strength that we had in the market and the XLF making new highs, JP Morgan has a failing rally here. And everyone's talking about this morning interest rates. They look, so it's been something we've been talking about here in Face, Grega, Steve, everyone, about a strong bond market. 10 years not open, but still think this is going to give away this low at 143. So we'll see if we get some type of the catalyst for this final move down. And, there's some people talking 110. That's going to take a bit of a mini panic, in my view, in risk. So I want to make an announcement. And anyone who's interested in doing this, you have to be a subscriber. GBP, I'll see where it's at when the Dixie is over par, Shab. I actually think that Euro's going to lead it next time. It's not going to be cable strength over euro. But I'd like to make an announcement, and this is for subscribers only. Our pattern in play has been automated, and we're running beta tests on it. So if you're a subscriber and you're interested in trying it out during our beta test, just send an email to info@ForexAnalytix, and we'll get you set up. So it's basically you're putting this on autopilot, the pattern in plays, so you don't have to worry about it. I mean, a lot of people know what trade copiers are, you know, so all of these trades in an area will go out. It works on MT4 and MT5, and you don't have to use it on your live account. Of course, it'll work on a demo too if you want to test it that way. So anyone out there have an interest? Okay. So you can automate what you normally had to click the mouse and finesse on your own, just in case you're away. All right, with that being said, I'm going to bring Blake on. And okay, Chris, thanks for volunteering. And
Hey, Coach.
Hey, buddy, how are you?
Hey, yeah, just to expand on what you're saying. I'm doing all right. I'm just waking up.
Yeah.
Tuesday morning, type of thing. So we are automating our patterns in play, as Dale said. And so if you are a subscriber of ForexAnalytix and you have, if you want to automate the patterns in play, you can do that via MT4 and MT5. We are releasing our beta version of that. So if you are interested, see this little chat box down here on the bottom of our platform. You can talk to the folks here in our support and just let them know that you are interested, and or either or you can email support@forexanalytix.com and let us know. Yeah, so we've got a few people that have already jumped on that were listening to the daily roundup webinar yesterday, and we're extending that offer just for a few traders just to beta test. We've been beta testing already, but it's a really neat feature, especially for those people that are outside of the United States. If you're in the United States, it automates, but you have to authorize each trade. Because of the rules in the United States. Yeah, you have to, like, it'll ask you, hey, do you want to take this trade? And you have to physically say yes or no. But it it still gives you the signals when it happens. And same if you're outside the United States, a lot of people love to automate these patterns. And these are, remember, our patterns are they're by the book type of signals, and so it's pretty neat to have. And if you're interested, make sure you let us know. This little chat box right here will do the trick, or you can email us at support@forexanalytix.com. Okay. So thanks, Dale, for bringing that up, and I'll make sure I'm mentioning it again before I leave. Okay. So yeah, we were talking about the yen. I'm actually short some dollar yen. We got this nice little head and shoulder pattern developing. But I'm really surprised Apple's only down $10 pre-market. So there's some news out of Apple that they're going to miss guidance. Now, there was a lot of comments last night via financial Twitter about how much of a weighting Apple has to the S&P, to the NASDAQ 100, to the Dow. And it's pretty substantial. So, I think it makes sense to be watching Apple today and also be watching Walmart, because Walmart's now starting to guide lower as well. So you got, two pretty big bellwethers that are guiding lower. So it's going to be really interesting to watch what the reaction is at the open in equities. And if you're wondering, well, why isn't the dollar yen weaker yet? I think the dollar yen is, on pins and needles right now. But one of the other things that I wanted to mention regarding like the yen and the dollar as well, not just, the dollar yen, but, the dollar, against the euro and whatnot, we really haven't seen the hard data in the US weaken. Now, a lot of the data that we're getting right now is, stale, if you will, but it's going to be interesting to see the data coming out in the following weeks. One of the, I think, really important pieces of data that we're going to have to watch this week is we're going to have to watch the PMIs at the end of the week. The market PMIs. These are going to be really important as we go into the end of this week for U.S. data, and if that starts to turn, then you got to start being a little bit even more cautious moving forward. But anyway, the dollar yen, as long as we stay below 110, the risk I think is still to the downside. And then, obviously with the S&P and the rest of the markets, we had a breakout of the highs going into last week, and then today we've slumped. We've come down a little bit, but not much. And I'm not too terribly worried about the equity markets while we're above this 30, well, basically 3,300, but 3,330 is still going to be pretty important here. Like I said, while we're trading above that, yeah, we might have a little bit of selling, but nothing too substantial at this point in time. Like I'm not sitting here really worried about equities as of yet. And like I said, we are down, I think 9 or 10 points pre-market in Apple. It's not that bad. I mean, a lot of people are like, well, what's going to happen with Apple? They're going to probably buy back more stock as the stock moves lower. They'll issue out some and issue out some bonds and buy some stock back. So it's the downside should be fairly limited. That's the market's attitude at this point. But seeing how the S&P performs when at the open is going to be pretty important. The euro continues to slide. I mean, we are at we're moving into new trend lows. As I had mentioned to you guys before, I'm really interested to see how the euro reacts down here below 108. I think 107.89 is going to be pretty big. So let's see if we can make our way down there. This is a very strong, descending channel, and you had brought it up, Dale. Dale talked about it just a little bit ago, but I'm going to bring it up here. You should look at this euro the euro sterling. Man, we are sitting on some pretty key support here. This is at the late 2016 spike lows. You can see them right here. They'll pop up here in a second. I mean, whew. Sorry, I didn't mean to yawn on you guys. Whew. But we're sitting at these at this really key support here, and the cable's bid up today, and the euro is obviously trading really heavy. So a break below this 82.70 would be pretty bearish for the euro. I didn't get the DSI last night, but the DSI going into the weekend was at 8, I think, for the euro. So, obviously when sentiment is as weak as it is, you got to be a little careful with being on the short side of the euro with sentiment as, like I said, as weak as it is. But it is, it's still the pair is still trading really horribly. I mean, I guess if you're bullish, it is. I don't have any euro exposure. I'm just wanting to see what the euro does down here. Like I said, the big 127% extension, 161% extension of the old head and shoulder pattern. We've completed the head and shoulder pattern, but that, it's all down here where we're currently at the 108.20 to 107.85 level. Cable popped up today. Actually, pretty strong move out of the cable. We're knocking our head up against some resistance. These previous highs are holding up the rally. Wedge resistance comes in around 131. So, seeing what the cable does around here is going to be interesting. It's hard for me to imagine that the cable is going to get much of a rally while the euro is trading so heavy. And if you look at the dollar against, the commodity currencies like the Aussie and the Kiwi, and the dollar is actually, performing really quite well. And this Aussie is really at risk too. I mean, I tried to play the Aussie on the long side last week. If you guys don't recall, I bought it here at the 67, like 15, right through this trend line. I ended up selling it for just about break even. Tried to play it to the long side, thought, okay, hey, we hit a 10-year low. It's gonna bounce, false breakdown. But here we are with, the news about the coronavirus and its impact, which should, it's not a surprise if you're listening in here every day. We've talked about how the coronavirus is really going to impact China and, supplies of everything globally. These warnings shouldn't be too big of a surprise to us. But what's scary is how the Aussie is really responding, because, the Aussie looked like it was going to forge a new low, or a solid low down here. And here we are retesting this broken trend line. My fear is a break below the 66, cent level. We could trade a lot lower. I mean, you look at the daily chart, there's nothing but open skies down below. And that's the scary thing about the Aussie, especially, the Aussie looked like it was trying to form some sort of bottom. So anyway, and we were talking about this in the chat room at Dale, and I want you to think about this really quick. We were just talking about this in the chat room just a little while ago, about, how the coronavirus can, sustain on a surface for several days. Some experts say that it could sit on a surface for up to like a week and a half and still be infectious. Wow. I know. So think about all the stuff that you buy from China, or things that are purchased or made in China. What's going to be scary, and this is the one thing that
they're burning money.
Oh, what's that?
They're burning cash because of people handling it. In China, they're actually burning it.
Everybody wants to be a central banker today, as it seems.
What's that?
Burning money, didn't you say?
Yeah. Yeah. But I mean, because, I've heard this before. I mean, there's all kinds of bacteria and everything on cash, anything that people handle. Okay. So in China, they're burning, they're torching currency.
Well, what I would be really concerned with, and which would ignite a whole new scare, would be what happens if, like, some of our postal workers in the United States start to contract the coronavirus. That would be scary, right?
It's everything.
If you think about that.
How about food service? Restaurants.
Well, food service as well, but how about, like, you got
that's true, mail.
Post office employees that are handling packages that are coming in from out of the country, and we haven't seen any cases like that, not that I know of, and but that would be something that would scare the living daylights out of.
Boy, I tell you, if Mother Nature was behind this, to have all of these unique characteristics for it being infectious and people being asymptomatic, and it living on a surface that isn't biological for all this time, I'd be surprised. We've never had that. I mean, has there ever been a virus that does that?
No, that I know.
That's what I mean.
Yeah. So, and look, I'm not here to be, I don't want to scare anybody. I'm just saying that's I think that's a big risk. I mean, if what they're saying is true, and who knows, I'm not an expert by any stretch of the means in the coronavirus. I'm just, regurgitating things that I hear. But like I said, if we start to see cases in postal workers, that would freak. I mean, the market would come to a the global economy would come to a screeching halt. No one would buy anything from China. Anything, nothing, zero. Everything would get stopped up at our borders and quarantined immediately. You know what I'm saying?
Yeah.
So just
it's a big deal.
It is a big deal. It's a big deal
because
if
it's
things
so
like
unknown.
that develop.
So unknown.
Which, you know, so one of the other things I wanted to just take a real quick look at before Steve and Stelios come on here. This is the US dollar Mexican peso. I was such a numbskull. I'm focused on the dollar yen last night, and I was looking at the dollar Mexican peso trading at 18.56 last night, and I'm like, I should buy this just, you know, after the Apple news. We were trading literally right here, like right here after the Apple news. I'm like, man, I should buy some of this dollar Mexican peso, and I didn't. I you know, like I said, I was focused on the dollar yen, and yesterday was President's Day, so we watched a movie with the kids. So I didn't, you know, I wasn't like super focused on the market, other than, you know, I had my position and that was it. And we started to rally. Now I'm looking at the US dollar Mexican peso because we're in a descending wedge, and a descending wedge by definition is a reversal pattern. If it, you know, the risk now is a break to the upside. So I'm watching this really closely, because if things are going to, you know, get worse from a risk appetite standpoint, we're going to see a move higher in the US dollar Mexican peso. And what I'm going to be looking for is a move back above, well, you know, 1870, if that happens, but more importantly, like above this 1875, the previous support here. We start breaking above those levels, and that's going to be a signal to me that, you know, things are getting worse, not better, and as far as risk appetite goes. So that's something that I'm focused on going into the North American session. I think that's going to be a pretty important barometer of how we view risk. Also, one last thing I'll talk about, and then I'll hand it over to Steve and Stelios, is obviously I'm looking at gold. Gold has broken higher out of this triangle. You know, I blogged about it on Friday or Thursday of last week, you know, back here, and we are now starting to break higher. So, you know, a move above 1600 would be, you know, just another indication that things are, you know, getting a little sketchier regarding risk aversion. So just keep your eye on gold. Gold has been very steady, and it's been very strong. It has not backed off at all. So you know, the risks are starting to increase that gold could you know, blast higher. And remember, the ultimate target for gold right now, based on this long-term pennant, it's still well above 1700. 1740 is where the projected move of this bullish pennant would be. And I know that sounds crazy to a lot of you. You're like, wow, you know, gosh, a move to 1720. Where's that? You know, holy cow, I wasn't expecting that. But that's what the bullish pennant points to. And it's not going to happen overnight. It's not going to happen like tomorrow. But this is what we would look like, you know, weeks from now, if we continue to break higher above 1600. So just keep that in mind when you're thinking about gold, and, you know, thinking about yen and risk aversion, risk appetite. Think about what a move like this in gold could do. So just you know, again, this is kind of like things that I'm focused on going into today's trading. Now, remember, you know, the dollar is pretty strong right now. Economic data has been relatively strong. We haven't seen, you know, our hard data in the US turn lower, not yet. And so if you're wondering why the dollar is so strong, and because right now, as far as everybody's concerned, you know, the dollar is still the least dirty shirt in the hamper for now. while the data is still good. But I think the PMIs at the end of the week are going to be pretty important for the dollar and how the dollar performs moving forward. So just wanted to bring that up. All right, guys. So really quick, I'm gonna just mention one last time, excuse me. If you guys are ForexAnalytix subscribers and you want to automate the patterns in play and you want to test out and beta test our system that we've made for MT4 and MT5, make sure you can contact us right through here through the chat box on ForexAnalytix when you're logged in. You actually don't even have to be logged in. You can go right to our site and start a new conversation with our support staff here, or send an email to support@forexanalytix.com. That's support@forexanalytix.com if you're interested in beta testing our automated patterns in play. So with that being said, I'm going to pass it over to my colleagues Steve and Stelios and Dale. Good morning, guys.
Good morning.
So
Good morning.
hey guys, there's some pretty negative news about Apple overnight. What do you make of the warnings that we're seeing from Apple and Walmart earnings that came in?
Probably great catalyst for new highs.
Great catalyst for brand new highs, huh?
Yeah.
Why not? I mean, the S&P is it's only down 0.5% right now, and Apple is still, it was, last I checked, it was only down like $10 pre-market. It really has been very limited.
Just imagine the opposite scenario. Imagine Apple coming out yesterday, giving guidance that they actually expect better earnings than initially announced. Where would the S&P be now?
2,500. Just kidding.
2,500, no, but 3,400 plus, for sure.
Probably, yeah. Anyway, it'll be interesting to watch U.S. equities this morning and how they perform. But I'm sure everybody wants to hear you guys' opinions on it. So I'm gonna pass it over to you. You guys have a great day. I'll see you on the daily roundup webinar in a couple hours.
Thanks,
Blake.
All right, thanks, guys.
Good morning, guys.
Good morning, Estelle.
So we are starting to see companies talk about the effects of the virus and how the Chinese economy stalling, or actually no, closing down is going to affect everybody. Everybody apart Tesla, apparently, because they're up like 5% again now, pre-market.
Of course.
But I mean, this remains the main question for me, and I think things are going to be much tougher than the markets are expecting. So, we have to keep an eye on that. We have numbers in about 2 minutes, so I do have some time to talk about things. We did have some, I don't know if you saw this, guys, car registration numbers in Europe. Did you see those?
No, still I didn't.
Year-on-year numbers. Italy, minus 5.9%. Germany, minus 7.3%.
Sounds healthy.
France, minus 13.4%. It's just all kicking off now. And I
can't blame that on coronavirus.
Well,
no,
yeah.
For sure not. No.
That's just the consumer not buying new cars.
Yep.
Yeah, to be honest, from experience, I can tell you, it's a good thing if German consumers start buying a few less cars. They actually overdo it.
They have 3 Mercedes and 4 BMWs in their garage.
Just to give you an idea, I have a Mercedes. My car costed new, like in Germany, like 62,000 euros. And I got it from a guy there that worked in Fraport for half the price after 2 years. So with 23,000 kilometers, that's like
nice sale.
15,000 miles. So I bought it with 15,000 miles, brand new. I even got a 2-year warranty from Mercedes for half the price.
Wow.
Not bad.
Yeah. So they change cars like shirts.
Like wives.
Yeah, I've had mine for 15 years, so I'm not sure about that.
Yeah, you don't want to do that. You don't trade in that. John Derrick did, though. From Ursula Andress to Linda Evans to who was Bo Derek.
Wow.
Western world problems.
Yeah, so
Okay.
he had 3 different cars during his lifetime.
So, very big beat. New York Empire State Manufacturing.
And very,
Wow.
very
Very
bad
bad
miss
out of Canada.
Canadian manufacturing sales.
Yep.
Minus 0.7% versus positive 0.5% expected. But yes, New York Fed manufacturing is like is more than 2.5 times.
Yeah, it is a volatile number, but still, it's a big beat.
What was expected, yeah.
What else did we have? Excuse me. We had numbers out of UK, which continues to trundle along, even though, Brexit, we don't know exactly what's going to happen. We had earnings numbers, was expected at 3% year on year, came in at 2.9, so 0.1% worse. But once again, compare this to inflation, which is over a point lower. So there is definitely no squeeze there on the average UK person on that front. We also had employment numbers. Claimant count change was quite a lot better than expected. So employment in the UK seems to be close to all-time highs. So not bad. Obviously, we probably have the same phenomenon as in the US, where the quality of employment is decreasing.
Is deteriorating, by the year. Yeah.
So you have more people working for, in less skilled jobs and probably making less as well. So that was out of the UK and German ZEW economic sentiment was we were expecting 21.5. This is an index, came in at 8.7. So the German sentiment and European sentiment is decreasing. Makes sense because of everything that's happening within Europe and outside of Europe. So I really struggle to find anything good about the Eurozone at the moment. And I've been saying this for a while. I just don't see anything apart from the fact that they have zero rates and Euro is one of the main funding currencies. That's about it. So that is that. And what else do we have? We have, we're into the year of elections in the US, and obviously there's going to be a lot of jockeying into position to see who's going to be leading the Democrats and the Republicans and all that. And we have Michael Bloomberg, who apparently is gaining ground. Although the numbers that we got today was from his own channel, saying that he was gaining popularity. So you take that with a pinch of salt, and that's I think that's pretty much it. Actually, I don't have anything else.
I still think that Bernie Sanders has a very high probability of actually making it.
I agree.
And I'm still advocating, as I've been saying since more than a month ago, that the market is really not pricing in that possibility, or if it is pricing that possibility, the market thinks that it's going to be a very easy win for Trump if Bernie Sanders is his opponent. Personally, I would definitely take the other side of the market. Not that I'm advocating that Sanders will win Trump if that's what we have, but I think that the market should really reprice the chances of that happening, because it's not zero.
Yes, I agree. I absolutely agree. And Bernie Sanders is very different, probably the total opposite of Donald Trump. So if he comes head to head with him in the elections, it's going to be, I think, a much tougher proposition for Trump rather than anybody else from the other side. So
I actually think that Bloomberg might be a better candidate for claiming victory. I mean, because I think he has more chances because he can attract some of the middle ground people. I mean, plenty of the middle ground people as well. But that's assuming that he's going to make it, which I still think it's a rather low probability scenario. Now, I would totally understand if the Democrats elect Bloomberg, why the market is going to be happy about it, in the sense that it's the best possible alternative for the market. I mean, So I can understand why the markets in that case would celebrate, because either they got Trump re-elected or Bloomberg should still be rather okay. But I think that the markets are ignoring the election risk as they've been ignoring every single risk we've had since a few months ago.
Wow, the euro is really dropping now.
Yeah, here's the euro actually on the 4-hour chart. That's what I was monitoring. Broke through this recent little triangle. As I've said many times, triangles are consolidations that more frequently than not break in the direction of the trend. So sorry, this is euro yen actually. Let me go to the euro. So here's the euro. It got rejected from here. It had this little triangle. You can see it here. Oh, there we go. So there it is. So lower once again. It's definitely been a strong move lower. As Blake said, we should start paying a little bit attention closer to 1078 or so. Having said that, it's more than clear that the dollar remains well bid. Despite that happening, though, and I didn't want to interrupt Blake before he said that gold and silver remain very strong. And by the way, it's worth noting. Look at gold. Gold is at the highs of the day, as the dollar is actually pushing higher, and as we just got some positive US news. Here is silver, same deal, at the highs of the day. So keep in mind that not only gold and silver have been pushing higher as the dollar has been holding its ground and actually has been appreciating since several days ago when we found a low. Actually, you can go back in the chart and you can see it. We found the low 31st of December. We've talked about that many times, seasonality, right? So we found a low 31st of December. We've been moving higher since, and gold and silver have spent all the time either consolidating or moving higher as well. Keep also in mind that both gold and silver have been, sorry, gold, not silver in this case, gold has been pushing to all-time highs against many currencies. So actually dollar is one of the few exceptions. So it's not really a surprise that gold remains very well bid, because gold has actually been testing or moving to all-time highs against many currencies. And I'm talking about major currencies. So for example, we know where gold against the euro, against dollar has been, but look at gold against the euro. We actually had a look on, at this on the webinar. It's now like 2-3 months ago when I drew these two possibilities. One possibility, I said that this is a corrective formation, and we will either consolidate a little bit longer within that triangle or directly push higher from there. And look at this. This is an all-time high. The previous all-time high was at 1,387, and we're now 100 euros higher. Okay. Gold against the Aussie. Guess what? All-time highs. And no need to go over them. Many currencies. So gold is in an undeniable bull trend against the vast majority of the major currencies. Dollar is the exception. And if you're asking me, I think it's a matter of time for gold to also be testing all-time highs against the dollar. Now, might not happen immediately, might not happen because of what gold is going to be doing in isolation, but as I've said many times, I do believe that dollar is in a bubble in the sense that not that it's moving higher in a vertical type of way, which usually describes behavior from bubbles, but because it is ignoring all the important fundamentals that are required in order for a currency to actually hold up very well. And I think that sooner rather than later, the market is going to start paying attention to those. Anyhow, so gold and silver, if you remember, I started, many of you weren't here yesterday because of the holiday, but yesterday I started by showing what I consider important for this week. And I mentioned 4 or 5 different tickers, 2 of which were gold and silver, 2 more being the benchmark bonds, showing that the benchmark bonds, treasuries, and bonds were testing triangles resistances. There it is, the bond and the treasury. And I also showed that gold and silver were testing, triangle resistances as well. And I said that, it is very likely that all of those are going to break out at the same time. And as it seems, that's the case today. So here are the treasuries breaking above this triangle, which is an expected move. I mean, that was a textbook bullish consolidation, and we're breaking out from it. Now, if you want to look the opposite side, which is the yields, here are the 10-year yields poking below this triangle, and in my opinion, targeting roughly 125 as the next downside target. Here are the 30-year yields, US yields, doing the same thing. So, bonds are breaking higher, yields are breaking lower. I think those should produce, at least, several days of continuation, as at the same time, gold and silver are breaking their consolidation formations and looking to appreciate even further.
I remember the last time I've seen this type of divergence between the bond and the note.
In which, yeah, you mean because the bond is still far away from producing a higher high,
yeah,
while the treasuries are almost there. That's what you mean, Coach, right? Yeah. I agree with you. I agree with you.
When's the last time we saw anything like this? It wasn't
it's not frequent for sure. It's not frequent.
Okay.
By the way, another
do you think
thing
that would augur for a euro bottom eventually, just based on the yield differential? That
absolutely, I have many reasons to believe that the next big move in the euro is going to be higher, as I've told you. So, despite absolutely accepting the fact that the euro remains in a downtrend, I don't think that it makes any sense being short the euro, because I think that the downside might be rather limited, while the upside, whenever that starts, might be in 6 months from now, might be in a year from now.
Do you have any fib extensions in euro down around the 107 handle?
Yeah, let me show you. So here's the euro, the daily chart on the euro. Yeah. Okay. So
107.80.
127%. Yeah, 127% extension of that last rebound is at 107.8. And it's also a horizontal support resistance zone. And then we have the 161.8% extension at 106.5.
Under 107, I just have to close my eyes and buy something. Okay. Thank you, Steve.
Yeah, my pleasure. So one other thing I mentioned yesterday was crude. Crude was testing the first area of resistance. Very nice rejection from there. So this keeps the possibility that this is simply a bear flag with, whatever bearish interpretations. I said that, one possibility is we get rejected from there. One other possibility is we might see a little bit of a higher price, but I would assume that we will get rejected below 55. Actually, I was quite confident in that. Proof of that you can find here. So this is our platform, and this is the WTI. Yeah, weekend analysis. Crude is rebounding after building a base at 49.30, but we doubt that this move can bring it above 55. That's a weekend analysis I wrote. We closed the week right at the channel's resistance, and the break above it should target 54 next. We would actively be looking for short positions around that area. Never made it there. It got rejected from the first area of resistance. To be honest, I was a little bit, hesitant to, to think that it's going to get rejected directly from here because, it has suffered quite a lot and it hasn't managed to put a rebound, but it seems very likely. So I would have to say that given the evening star formation that we're probably going to be getting by the end of the day, if today proves to be a down day, I think that short positions against 52.60 will be making sense. And I would be looking for the next downside target to be 47.40, which is, quite a decent distance away from where we currently are. Another thing we talked about yesterday, and I'm repeating quite a few of them because yesterday, we had reduced attendance due to the holidays, was this one, platinum. I reiterated what I said on Friday, that, 950 to 955 is a major pivot here. So, as long as we stay above it, platinum might actually, accelerate to the upside. And only if we break below it, I would be looking for a deeper correction. Today, we seem to be, accelerating higher. So let's see how that can work out. As at the same time, palladium seems to be breaking above the triangle, so no more consolidation as it seems. We're headed higher. And as I've said, in that case, my target is at 2.7K. 2,703 is the 161.8% extension of this triangle's range. I would definitely expect a much larger correction from there. It's more than certain that we're going to have a huge RSI divergence as well. You can see that the previous RSI reading was out of this planet. It was something like 88, 93, 94, something that you might take a lifetime to see on a daily chart on almost anything. So I'm pretty sure that the next high is going to be with RSI producing a major divergence, and I think that's going to play out quite nicely. Anyhow, after all that, let me open the chat box and see what are your questions. So let's read it. Hi to everybody. The inflation adjusted real yield is minus 0.5% on the 30-year T-bond, has not been seen for about 8 years. That's a good point. And I think we're going more negative, Baroque. What about the pound? Sure, let's have a look at the pound. So the pound is consolidating, and I don't like this price action, meaning I wouldn't be doing anything with the pound. I would have loved to see a little bit of a deeper move after we broke through this triangle here. I would probably be looking to get involved with the pound if we saw this move lower extend, to 127 to 128, within that area. I would then be satisfied that we've probably seen, a nice corrective move come to an end. But now I'm quite skeptical because, this pattern now doesn't look, that pretty. So of course, my medium-term bias remains to the upside, so that hasn't changed. But I'm not sure if we're done moving lower, and that that is a big problem because in order for me to even consider buying, I would want to feel more comfortable that we're done pushing lower. And currently, because as I said, the move didn't unfold as I expected, I don't have that confidence. So I'm looking higher, but my confidence in that is rather decreased. So what do you do in that case? You find something else to trade. That's as simple as that. Yes, sent an email. I have been testing manually the crossover with good results. Yeah, results are good. That's why we're issuing them. And if you send an email, they should get back to you by the end of the day today, sending you the little mod and instructions, simple instructions of how to install it on a MetaTrader. Either you have a MetaTrader 4 or a 5. We've built versions for both. Yes, it's true. China is burning their notes and coins because of the coronavirus speed. Hello, guys. I'm new to Forex. How can you help me be smart on trading, and how can I sustain the growth in this? Want to do this full-time as I transition from the full-time employment. Yeah, that's the best thing to look at it. I mean, you should transition over time because, you know, trading is something that needs time and trading and training on doing trading, and you know, you should only consider switching jobs once you have consistency for quite some time. The way we can help you is by doing what we're doing, which is, you know, giving analysis, and then you also need to, you know, do work on yourself so you can start, you know, reading the markets properly. But you know, this is a process.
I have a suggestion for him. And everyone's going to say, "Oh, Dale, you're just a salesman." Join our community and spend time in our members' chat room.
Yeah, that's going to help you a lot.
So that you can be around people who have already done what your goal is and learn from them.
Yeah, I would 100% agree with that. Now, there is a friend here that is asking, why is Deutsche Bank 40% higher this year? And the simplest answer I have for you is because that's what penny stocks do. They tend to produce big moves one direction or the other. So Deutsche Bank has had an impressive last, let's say, 8 months, but don't forget that if you zoom out in this chart,
yeah,
it's simply, actually, we need to go to the weekly so you can grasp.
It's had many of those periods of
so you can grasp the horrific nature of what's been happening here. So now that you're having this view, right, Deutsche Bank back in 2007 trading at 140, and now you put that in context, meaning, yes, it from 140, it made it down to 6.5, and yes, 6.5 has now become 11. Quite a big move, but you know, just by zooming out, this is like a simple blip. We've had blips like that before. Look at this. September 2016, people getting optimistic about the then plan to revamp the business, took it from 11 to 21, and guess what? From 21, after consolidating for a period, we went to 6.5. So my answer is that it doesn't need to have a real reason to do that. It's now a penny stock, and it's doing what penny stocks are doing. As simple as that. Okay, from a technical perspective, I can also tell you that, you know, nothing moves in a straight line, right? Nothing. So yeah, at some point it's going to be getting some relief rallies, and they're going to be looking like huge rallies. But keep in mind, there are so many investors trapped at, you know, all kind of levels, none of which is good, that, you know, it's not a real recovery. So yeah, I mean, you can trade it to the upside. It's been moving quite nicely. 940, 950 should be support from this point on. So, you know, you want to buy it, you can attempt to buy that area, you know, for another move to the upside, but, you know, nothing else to add to this. Nothing really fundamental has changed in Deutsche Bank, if you're asking that. I mean, the same problems that made the market take it down to 6.5, you know, the same problems are still present in the business today. Euro USD gap since April 2017 at 1,073 area, says Dimitris. Thank you, Dimitri. Gaps are always nice to monitor. I agree with you. I mean, they tend to get filled. Can you have a quick look at natural gas? Absolutely. Natural gas, here it is. And as you see, and thank you for noticing, as you see, it's currently testing a quite important resistance area. So let's see what happens from here, because we're testing this descending channel trend line resistance. If we break above it, we can start talking about like a bigger rebound higher. If you remember, I've clearly stated here that I think that natural gas is probably at very appealing levels. Now, I would love it even more if it actually produced a lower low, something like closer to 1.5. But I've kept repeating again and again over time whenever the conversation comes that keep in mind that tangible commodities are actually tangible commodities. They are things with intrinsic value that have a cost of extraction, cost of distribution, etc., you name it, which means that the downside, whenever you get to very, very cheap levels, should always be considered to be limited. So, the lower you go, the more asymmetrical the potential risk reward is, for long positions. And, that is something that is, undisputable. It's mathematical fact. So, at some point, I think natural gas can really explode higher. The same type of move you're seeing in Deutsche Bank, for example. Question about euro yen. I think that euro yen, I actually showed it before. Please, can you have a look at copper? That was a previous question. So let me first show copper. So copper remains under pressure, and in my opinion, this rebound higher, which is likely corrective, that's why I drew it like that, is likely to be about to fail. So perhaps that's not even a bull flag. Perhaps that's simply a pennant, in which case that's the pennant. So watch this trend line support, because, regardless of if this proves to be a pennant or a flag, the trend line support is going to be exactly the same one way or another. So what's this trend line support which we're currently testing? Because if we break below it, which seems like a high possibility scenario, I think that copper will be trading lower rather soon. Now, having to do with euro yen, and this brings me to the other thing I wanted to talk about, the yen pairs in general. I think that the euro yen is bearish, and you can see it here. We broke through this ascending channel. I kept saying that it looks corrective to me. We then formed a little bear flag. We broke below that as well. And I really don't see any reason why we can't just push to new highs below 116 eventually. And more or less the same applies to CAD yen, which is currently breaking through this corrective channel. Aussie yen. I drew that actually when we were breaking lower from there. It has played out perfectly so far. Kiwi yen, which we have this little rectangle here with 70, 69, 90, 70 being support. I think below 69.90, you should be looking for lower prices as well. So in general, as you see, the vast majority of the yen pairs look like they want to keep moving lower.
Especially and that one.
Yeah, I agree. And what does that tell you about the USD yen that remains below this multi-year trendline resistance? It tells me that it has a very decent chance of actually breaking down from here. Risk reward for sure would only you know, excuse short positions here as long as we are below it, because, you know, you have to risk very, very little to potentially make a lot more. I mean, you can be short here with a stop loss above, let's say 110.50. That would be like 70, 80 pips. You're risking to retest 108.30, which in that case would be 140 pips of downside. So, you know, you start with a decent risk reward ratio, and imagine what's going to happen if we break through this formation. You can see a lot more downside, right? So the risk reward might end up proving to be like 10-1 or whatever. So that's, I think, recap of what I wanted to say, Dale, and we're at the top of the hour. So do we have an interview today?
Let me check. Dave Richards, are you at Crypto Wolfpack? Is that you? So all I have is my guest's first name.
I'm going to cover the DAX as well,
David.
Since we have a question as you're looking for your guest. So here's the DAX at all-time highs, by the way, yesterday, right? So worth noting that. At the same time, you know, this looks like a nice wedge. We had this false breakdown. So, you know, I admittedly, I'm also monitoring that and the RSI divergence. So despite being at all-time highs, would I be buying here? Nah, I wouldn't be buying here personally.
David at Crypto Wolfpack, please send me an instant message if you're here.
USD CAD upside near-term target. Listen, I've talked about USD CAD last week as well, and my outlook hasn't changed, which is the following. This move lower that we had in USD CAD and the very nice rejection, there it is. So we've had this nice rejection from this multi-month formation. You can see it here, this triangle in purple, right? So we got initially rejected from there, but we seem to be finding support at the 200 daily moving average. And as I've said, it's one of the pairs I like most if you're looking for being long the dollar against something. I think USD CAD is one of the best looking, as long as we clear that 133.10, 133.20 trend line resistance. So personally, to be honest, I like the fact that we initially got rejected here because we were overbought and we needed to work out these conditions. Now, I could say you can be buying against the 200 DMA and it might as well work. But I think that if we break above that formation, we're going to see a lot more upside. So I think it makes more sense to have more confidence, meaning more confirmation, meaning, you know, daily close above there. And I think you can be looking for much higher levels in USD CAD. That's what I think about it. So in USD CAD, I'm looking higher. So I'm not looking to sell. I'm looking to buy. Okay, to make that clear. So, Coach, any news about your guest?
I'm waiting. David, if you're here, please
use the chat
say
box.
Something in the chat box.
Or the question and answer box.
Yeah, I just have a Dave Richards. I don't believe that's our guest. If it is, Dave, raise your hand or say something. Going once. Going twice. A blown opportunity.
Too bad.
Whoever was, anyway, a blown opportunity to talk to the smartest group of attendees on the net. Maybe that's why. Anyway, I have Steve Anton tomorrow.
Oh, great.
At Best, you know, Best Traders, and Steve is very popular and an excellent trader. You know, so Steve will be with us, and then I'm bringing back Lydia on Thursday.
Okay.
Steve, we haven't seen Lydia in a while, and
indeed,
bringing
time to talk about the pound again.
Yeah,
now that
we have a strong bench here. Okay, and okay, great
Coach,
job, Steve.
great.
Hey guys, don't forget, if you want to try the EA out, to beta test it,
send us an email at support@forexanalytix.com.
Yeah. And we'll see everyone tomorrow. Steve Anton's my special guest at the Best Traders. Okay?
Thank you. Bye-bye.
All right. See you, Steve.